I wound up going bankrupt when I was 25, and it was heartbreaking. I watched my whole life slip away from me because I did not understand money. I didn't understand business. I didn't understand how to put that world together. And over the course of a year and a half, I raised some more money. I learned how to do essentially music festival ads. I did like $1 million in sales in the course of 12 months.
Wow.
Started doing it for other people, had a lot of fun. And COVID hit, and I was like, oh man, that sucks. And so I was like, all right, there's just no events. I was like, all right, what am I going to do in the meantime? And so someone said something. It was like, if you go into COVID and come out of COVID the same person, then you've like failed. You've missed out on your growth, essentially. In that time, the whole world shut down. And so I read like 400 business books in the course of a year, like 3 or 4 a week, something like that. I'm not even kidding. 400.
Welcome to the Briggs Banks podcast, where real estate meets real wealth. Whether you're building from the ground up or stacking your paper to the ceiling, Steph breaks down property power plays and money moves you can act on. From first-time buyers to seasoned investors, this podcast is your blueprint for financial freedom through real estate, business, and investment. Subscribe now. It's time to build your future. This is Briggs Banks with Steph.
Before we dive into the conversation, I want to let you know that this episode is a paid partnership with BetterHelp. You know what's interesting? We all have these patterns in our lives, the ways we react when we are stressed out, hurt, or disappointed. Maybe shutting people out or walking yourself into exhaustion, or that voice in your head that says you're not good enough. For me, is shutting people out. And here is the thing. We know that these patterns aren't helping us. We can see them clearly, but breaking them, that's a completely different story. I used to think I could just power through on my own, that time will heal everything, or I just needed to be stronger. But the truth is, some cycles are nearly impossible to break on your own. Not because you're weak, but because you're so close to see the full picture. That's why having outside support, real professional support, becomes a game changer. When you have someone who is trained to help you understand why these patterns exist and give you actual tools to help change them, everything shifts. You're not just surviving anymore, you're actually on your path to healing. That's why I'm partnering with BetterHelp today. BetterHelp is on a mission to make starting therapy easier. They will connect you with a credentialed therapist who is trained to listen to you and give you helpful, unbiased advice, ensuring confidentiality throughout the process. You just get to fill out a questionnaire and you'll be matched with a therapist as soon as possible. And if that's not the right fit, don't fret. You can easily switch therapists at any time at no extra cost. To get started, head on to betterhelp.com/BriggsandBanks. That is betterhelp.com/BriggsandBanks to get 10% off your very first month of therapy. I'll make sure to leave a link in the description so you can get right on. Breaking the cycle starts with one step, and this could be yours. Going to therapy is not a sign of weakness. It's a sign of strength. BetterHelp makes therapy simple with 10% off your first month of therapy to help you get started. So what are you waiting for? Remember, you don't have to do this alone. A problem shared is a problem half solved. And we are live. Hey everyone, welcome back to another amazing episode of the Briggs Banks podcast. I am your host, Stephanie, and today I have an amazing guest. He's way up there on the food chain. He's Samuel Wiseman, the founder and managing partner of Protopian Capital. That firm is betting that the so-called boring industrial cash flow can power very unboring climate wins. We're talking about industrial roll-ups done differently, meaningful founder exits, and how legacy manufacturing and building materials businesses can become a backbone for desalination, turning brine into concrete, and large-scale ecological restoration. Samuel went from a starving artist to self-taught A operator, closing an 8-figure deal. And now he's mapping seller-friendly paths from kitchen table conversations to premium outcomes without the usual PE surgery. I know this all sounds like financial jargon, but we're definitely in the right hand because Samuel is here to break it down for you. So one thing I ask of you, get a notepad and make sure you take notes as we welcome the experts in the field. Welcome, Samuel. It's great to have you on the pod today.
Wow, Stephanie, thank you so much for that glowing intro. You really do your research. Very impressed. Thank you so much for having me here.
Wow, it seems like you've lived a lot of lives. You've lived different lives. You've worn different hats, and your life should be a movie at this point. But you're just being very humble to just share your information on the podcast. Why are you on the pod today?
Why am I on the podcast today? Is that what you said?
Yeah, what's your goal for podcasting?
Oh, good question. A few things, I suppose. The first one, I mean, as boring as this is, it is to connect with people and to share the message and just to let people know what I'm doing. On the totally opposite spiritual end of things, I am very into art form as a spiritual practice. Into creating and putting content out there. I believe is one of the most holy things that a person can do, frankly. And then beyond that, I definitely see a lot of issues in the world that I have noticed could be solved by capital. And if more people knew how to raise massive amounts of capital, then they could go solve those issues on their own. So 3-part answer.
Nice. I really love your background. It's so green. It's so vibrant. It's amazing.
Thank you. It's really the metaphor for business that I have. I like you said, I was a starving artist in my early days, and then I eventually grew to eventually run a private equity company. I see art essentially as the blossom of business, and the capital and the merchandising and the supply chain is kind of like the root of it, and it all comes together to create the plans. Thanks for noticing.
So I titled today's episode From Boring Profits to Big Impacts. Samuel Wiseman on industrial roll-ups, meaningful exits, and funding climate wins. But before we delve into the full Glare conversation, can you take us back a bit on your journey, starting out, your background, and how you got here? What are the choices that led up to you doing your own thing, starting your capital business?
Absolutely. So I started my career in music, starving artist. I went to school to write Broadway musicals, actually. My grandmother was a pianist. My grandfather ran an orchestra. It was a great time.
Okay.
There's a girl involved.
You come from a family of talents. It's a very talented family line.
Yes, thank you for noticing. I'm quite fond of them. My grandfather's grandfather is basically the Music Man, if you've ever seen that show. But long story.
Wow.
So I went to school for music, and I was in the composition school, and I was asking everybody, I was a senior. I was asking everybody, hey, what are you doing after school? How are we, making it in music? And they were like, oh, I'm not doing this. This isn't real. There's no career in this. And I was like, we just spent like $60,000. What the fuck? Sorry, what are you talking about? You're not going to do this for a career. Why are you here? Blew my mind. Oh my God, I was so frustrated. So I dropped out of school, I think like that week or something. There was like a composer that like came to school and like told me, that like he was 50 and making like 50 grand in New York as a composer. And I was like, this is not practical. This is no way. There's no way this is happening. And I look around, and like in my town, there is this multi-million-dollar massive rave company, 10,000 people a show. And I'm like, they're making money. Okay, I'm gonna go hang out with them. So I started doing sponsorships for that company essentially. And then sponsorships led into me doing my own like sponsorship shows, fashion shows. And I did this show called the Festival Fashion Show, where the models were role models instead of runway models. So they embodied the idea of essentially the festival community more than, essentially what they might look like. Thank you. I actually was on NPR for that one. That was a lot of fun. So I went and I joined essentially this music festival company, and I started doing sponsorships. Sponsorships led into fashion shows. Fashion shows led into music festivals. And then music festivals, I was an artist. I didn't know what to do. I wound up going bankrupt when I was 25, and it was heartbreaking. I watched my whole life slip away from me because I did not understand money. I didn't understand business. I didn't understand how to put that world together. And over the course of a year, year and a half, I raised some more money. I learned how to do essentially music festival ads. I did like $1 million in sales in the course of 12 months.
Wow.
Started doing it for other people, had a lot of fun. And then COVID hit, and I was like, oh man, that sucks. And so I was like, there's just no events. So I was like, what am I going to do in the meantime? And so someone said something. It was like, if you go into COVID and come out of COVID the same person, then you've like failed. You've missed out on your growth, essentially. In that time, the whole world shut down. And so I read like 400 business books in the course of a year, like 3 or 4 a week, something like
What?
that. I'm not even kidding. 400. I have a list of them all. Most of them are garbage, of course, but a couple stand out. And one in particular, and I guess I say 400 books. I mean audiobooks, and then some of those were courses, and some of those were webinars. So maybe we're adding a little bit there. But one of the webinars was this guy Roland Frazier, and if you don't know who he is, absolute genius. He's probably the best in mergers and acquisitions. I'm not going to say ever, but like up there, maybe top 20 online, at least for sure. He essentially taught or teaches people how to buy companies for no money down, for no money out of pocket. And if you don't know how to do that, I always like to give. When I went bankrupt, I was an Uber driver, and so I rented my car from Uber for, I think it was like $100 a week or something like that. And then they rented the car from Hertz for $100 a month. And they didn't have to pay Hertz until I paid my $400. So they got my business before they had to pay for the business, essentially. And so the same thing with like a
Wow.
business, if you say, hey, look, I owe you all this money, but I'm not going to owe you this money until after I am running the business and I make some money, I'm going to pay you back on that money. And that's how that works. And you can do that with houses, you can do that with land, you can do that with pretty much anything in the world, honestly, but I did it with business. And so I did it with a hula hoop company in Oregon, no money down. And then we ran that one for a while. One of my bigger skills, I think, is poaching. I'm really good at like finding extremely talented people and getting them to believe in the project. And I'll circle back to that in a moment. But that was the thing. That was the trust element that got me to buy that company for no money down. It wasn't just as simple as like, hey, here's the deal structure. I essentially went out and was like, and I knew the guy. He was actually one of my clients for a long time. But I had put together a group of like C-suite people that had managed companies from, $50 million to $250 million, stepping into this like tiny little $1 million company. And these massive corporate executives will leave their jobs to come run these tiny things because they get to own it. So that was a big lesson. And then from there, we sold that one, and I wound up going back into art a little bit, trying to find art companies. And I wound up doing an $18 million media merger for a couple of companies. So that was a lot of fun. And then I essentially took every dollar I made from that and then just used it to hire consultants and learn private equity. And in the process, I discovered this concept called blended finance. And blended finance, it was really interesting when I was an artist. I studied Wagner, I studied Shakespeare and all these like massive, composers. And I felt like I had everything. I could sing, I could dance, and what I was missing was money. I didn't understand business. And with blended finance, what was really interesting was you get the talent, you get the deals, you get the operations, you understand the marketing, you understand the sales, but to achieve the very highest levels of business, it turns out what you really need is art. And so being able to see the absolute deepest levels on both ends and combine them together in blended finance just blew my mind. And so essentially what it is nonprofits use their capital in order to ensure for-profit entities. And these for-profit entities will essentially, sorry, I'm starting to get the echo back. But they will ensure the for-profit entities, and the for-profit entities will make sure that the nonprofits goal stretches much further. So, kind of a long story, a lot of education, did a couple of deals, ultimately discovered blended finance. And that blended finance concept allowing us to essentially use nonprofit insurance for profit investment, brought together a Harvard professor, a Georgetown professor, two Columbia professors, the president of the Boy Scouts, the oldest family office in Europe, multiple Fortune 500 C-suite. Essentially, they're all sitting on my board now to help me put this roll up together. So that's how I got into it. So it's kind of a long story, but yeah.
Your life is a movie, like I said. But you caught me at one point where you said, at the tail end of finances where arts meets. Like, I don't understand. What does that mean, really?
Yeah. So
Yeah, what
so
is it in terms of marketing or?
so when you're okay, so yeah, let's use marketing as like a really easy example, right? If you're an amazing copywriter, you're an amazing ad creator, you've got a great product. The bottleneck today, right now, is actually literally art. It is creative. It is ad creative. The very best people in the world, Alex Hormozy did like 2,000 ads or something like that, 2,000 creatives for his marketing.
Hmm.
In sales, you can run through all of these tactics. You can know their pain points, and that's going to do it a lot. But there's a million real estate agents out there, right? And it is the connection that gets these sales with people. Crossing the Chasm is my favorite book in the world. Goes really deep into that. Once an offer has broken into the mainstream, the way to break into these new pockets is through really tiny, fragmented, focused identities, and you show that through art. And so in the capital raising space, particularly with blended finance, you are pursuing an artistic goal. I say artistic,
Hmm.
it could be a social good, it could be a religious good, it could be a climate good. To me, that's all art. To me, that's all bringing together kind of these pieces of your soul. And when you're
Mm-hmm.
raising capital, you've got just like Crossing the Chasm. Are you familiar with Crossing the Chasm, by the way?
Oh no, I haven't heard about that
Cool.
before.
So that's my favorite book in the world.
Crossing the Chasm.
Yeah, 1991, Jeffrey Moore. It goes through
Okay.
150 years of market history. Russell Brunson, who founded ClickFunnels, read it in order to go public with ClickFunnels, or not public, or to sell it for
Mm-hmm.
billions of dollars for ClickFunnels. The number one TED Talk in the world is based on this book. The,
Oh,
the Lean Startup is like a Silicon Valley classic. That's based on this book.
let me note it down.
Yeah, it's amazing. The number
Yeah,
one
it's
copywriting firm in the
amazing.
world wrote a book based on this book called Ready, Fire, Aim. It's based on Crossing the Chasm. I could talk a lot about the number of people. Bill Gates wrote a sequel to this book with the founder of LinkedIn called Blitz Scaling. So anyways, Crossing the Chasm. So Crossing the Chasm, the gist of it is that you have your 5 phases of the market, and 3 of them are
Hmm.
separated by a chasm in the middle by these other 2. So you've got the early market and the late market. So the early market is made up of innovators and visionaries, and then you cross the chasm into the pragmatist market, the mainstream market, and the laggard market. So pragmatists are going to buy because they're going to lose money if they don't. Mainstream's going to buy because it makes them feel good. Laggards are not going to buy unless they're forced. And so in the mainstream market, the only way to get this to pierce the mainstream market after you've already done all of the businessy focused people is you just consistently have to do their kinds of art, essentially. Shaq had a really great example with Starbucks. He's like the most successful like Starbucks franchisor, if I remember the story correctly. And he realizes like, hey, this is a great product. This is great coffee. Your music sucks ass. And where I come from, this is not going to fucking work here. Sorry, I keep swearing. This is just not going to work here. And so he like specifically went to the CEO, Howard Schultz or whatever, and it was like, look, I'll do this, but I got to have my music in this place because it's not going to work with the identity of my crowd. And so that's like another great example of like art essentially breaking the mainstream. And so with
Okay.
blended finance, you do that with investors. So you have investors, and most people when they go to investors are like, hey, look, I can make you a bunch of money. And that's like kind of mainstream, that's kind of pragmatist level. But you're missing out on the innovators and the visionaries. And the important difference between these two markets, this middle gap here, is that the early market wants to be communicated to that the investment is new, that they're the first in on the ground, where all these other investors want to be communicated to that everyone else is doing this. This is already a very common
That's why
thing.
they should do it.
Exactly.
Okay.
And so
So
it's
basically,
very,
you need to find your crowd.
yeah, and not only find your crowd, but like find them at the right phase. Like they could all be hedge fund managers and they're all your crowd,
Okay.
but they think differently
Mm.
is the important part. And so the hedge fund
Mm.
managers
That's
up in this level, you connect with them oftentimes, especially in the blended finance space, you're not connecting with them through balance sheets. You're not connecting with them about the amount of money you can make or the security risks you've taken up. You're connecting with them over your mission. And so, that's how I was able to get these massive players, these Fortune 500, these Ivy League players, these old family offices together, is not because of, oh wow, we can just make a bunch of money. It's because of the spirit that we're bringing together, essentially. So that's what I mean by that. At the very highest levels of business, you need the soul of art, and at the very highest levels of art, you of course need the reality of business. Yeah,
Well, you're basically living up to your name, the wise man. Your name should be Solomon at this point, not just Samuel.
thank you.
But are you trying to let me know that you did all this during COVID? Like in 2020, you're just soaked up in books, love learning and all, and you came out of in 2021 a new man, basically a beast
It was
in the finance one.
pretty much. Yeah, I knew marketing, like I knew sales before
Okay,
that, but
yeah,
yeah,
yeah, you're doing that.
I didn't know any of that stuff. I didn't know how to read a balance sheet. And I was like a crazy hippie. I had like long hair and like, I wore like face paint. Half my head was shaved. Absolutely not a finance person. And people that I meet from back then, they're like, "You're in finance now?" And I'm like, "Yeah, dude, I'm really good."
Exactly.
It blows people away. And
That's
if I didn't
crazy.
have COVID, it sucked for the world. But if I didn't have COVID, that never would have happened. I never would have taken the time to study this
Yeah.
hard. So I was very blessed in that time. I can't lie.
Ah, that's great, great work. Let's talk
Thank you.
about your company and what you're trying to achieve with the company. So you're focused on legacy manufacturing and building materials. So why is that a vision for your company right now? What exactly is the company's vision and what are you trying to achieve with it?
Yeah, great question. So, like I said, I was a hippie. I'm very into politics. I got into music really to save the world. I got into this industry to save the world. And
Yeah.
there was a stat in COVID that said that in 2018, the top 1% had 25% of America's wealth. In 22, the top 1% had 33% of America's wealth. Today, it's closer to 45 to 50% of America's wealth is just concentrated in that 1%.
Wow.
I saw during COVID that private equity was getting most of that money, that there were 32 million businesses in America. 12 million of them are owned by old baby boomers that are about to die or retire. 8 million of those businesses, of the 12, are just going to shut their doors because nobody wants them, because their kids don't want them, because nobody around them has the skill to go purchase these
To
businesses.
run them.
They just don't, or run them, let's say. And we are the biggest wealth gap in American history, right? It's comparable to the Dickensian era of Tale of Two Cities, like the legendary poor people. We're in a worse situation essentially in terms of wealth inequality, right? And on top of that, climate change is the biggest existential threat. Maybe behind AI at this point, but for most human population it is climate change. AI is maybe the one thing that can solve climate change. Hundreds of millions of people stand to lose their lives from this, to say nothing of displacement, say nothing of the wars that are going to result from that sort of displacement.
Mm.
We can mitigate this damage. It is possibly too late to reverse everything within our life. Well, I think I'm going to live forever. It is possibly too late to reverse every thing within a normal human lifespan, but we can grow vertical farms. We can turn brine into concrete. We can put desalination plants on the sides of oceans so that we can have fresh water coming into my drought-filled Arizona. There are so many things that we can do to slow down the pain, to slow down the misery. A lot of it involves planting vines and flowers and making the world just a little bit more beautiful, and even if all the climate change stuff is a hoax, like we're just really making the world a little more beautiful. And so building materials is wonderful for me because it is old. It is not technologically integrated. It is not terribly advanced. Not a lot of people are looking at it. Robotics is still going to take a few
Mhm.
years to catch up with it. But the numbers, frankly, are so attractive that I know a lot of people are going to get into it. And if people like me who care about trees and rivers don't get into it, then all that money is just going to burn up in the atmosphere for dick-shaped rockets trying to make it to orbit. So that's what we're trying to do and why.
That's amazing. So essentially, do you go out to look out for these companies or do they come to you?
So we have a very steady marketing system, and I actually will say that I met this kid on Fiverr in Pakistan, and he's probably the richest Pakistan 22-year-old self-made in the game. I used to work at an M&A
Hmm.
firm, and he is blowing them out of the water. At least at the time, it was a factor of $280 to one. It's probably a little less now, but yeah,
Wow.
we do the outreach essentially.
Manufacturing companies that kind of go
Yeah,
into business with
absolutely.
this.
Absolutely.
Okay.
So they actually don't need to care about climate change. That's sort of the
Okay.
beautiful part of private equity is once we own it, it's ours. But when we are looking to purchase, so there's two things we're looking for really. If we're looking to
Okay.
purchase, we're looking for companies that are essentially doing 1 to 4 million in cash flow. They're doing at least 15 to 20% margins, preferably 30 to 40% margins. They're at least 10 years old, if not 20, 40, 100 years old. They've got at least 10 employees, if not 20, 30, 40 employees. And then they have a sales team and they're running ads. Those last two are very
Okay.
critical. Beyond that, no extreme red tape. The owner's got to be friendly. If you're an asshole, I'm going to hang up in 3 minutes or less, you know? Yeah. So that's the basic checklist. And then we have a deep dive of due diligence questions after that to check anything else.
Okay. I know you talk about operating at the intersection of mergers and meaning. So can you walk us through the engine that turns boring industrial cash flow into climate infrastructure? How
Yeah.
do projects like desalination turn brine into concrete and whatnot?
Absolutely. So, and this is kind of my masterstroke to stay humble, but
Yeah.
so essentially what we're doing is a roll up. And for those of you who don't know, a roll up is kind of like a wire and a cable where you stick a bunch of companies of the same time into a single portfolio and they're worth a bunch more money, kind of like how a cable is made up of a bunch of wires and they're stronger as a result. The sum is greater than the whole of the parts or whatever. So we're rolling up, we're going to the stock market. There's three major benefits. The first one is that we get a much higher multiple for building materials in particular. The
Hmm.
multiple on the street is like 3 to 5 times cash flow. The multiple on NASDAQ is like 17 times. And so obviously huge difference. You know, if you're pulling $1 million,
Yes.
you know, obviously it's 4 million versus 17 million in your pocket. The second major benefit of going to the stock market is what's called the equity collar. And the equity collar allows us to liquidate our shares without selling them so that we can spend our stock like cash, but still
Okay.
participate in the upside over time. And then the third thing is that essentially we can stock swap with other companies and just boost our stock price. I won't get super into that. But that second one there is essentially we can donate stock to endowments and that stock will grow over time and they don't have to sell it. So this donation is not just a donation, it's a donation that's going to grow over time. And they can take out essentially a
Hmm.
margin loan on that money. So if it's an endowment that say, you know, really cares about rivers and they want to raise $10 million, or let's say the desalination plant, for example, great example.
Okay.
Those are fairly
Okay.
expensive. I forget how much off the top of my head. Let's just say 100 million bucks. And let's say that you know we donate 20 million in stock to the endowment, and they want to put up a desalination plant. They don't have $100 million. So what they can do is they say, "Hey, investors, if y'all come in and invest alongside of us, we'll put up our $20 million and say that if you start to lose money on this project, take our money first. We'll put up our $20 million as first loss capital or conciliatory capital." We will also say that, hey, maybe the project doesn't lose money, but maybe it only makes a 10% return and you're looking for a 15% return. We will put up our
Hmm.
$20 million and make sure that you're getting your 15% return. So you'll actually boost
Okay.
your return profits. And then the third major kind of benefit there is that we can also use our capital $20 million bucks. We'll go stick it in a bank, UBS, Merrill Lynch, something like that. And they'll give us a loan at 2% or something along those lines, or 1%. Or we'll even go to another nonprofit and say, if we put up this capital, can you give us a 1% loan or a 0% loan even? So while our money is
Okay.
growing in the stock market, we're still making more money. So, uh,
That makes sense.
yeah. So it's just massive exits go into complicated financial structures to help nonprofits do better work, essentially.
Yes, for you to be able to drive yourself into a field you didn't have background in. You had background in artistry, and you basically left all that to delve into the crazy waters of finance on your own, and you're winging it. You're not just winging it, you're thriving at it right now. You're handling billions of dollars work. I would say we need to have a spin-off for this because it feels like I'm sure our listeners will be like, okay, this man is saying so many things all at once because we need a course to break it down to them step by step, everything you've learned because
I'm like
it's
literally
mind
like in
blowing.
coaching right now because I have so much to say and I'm trying to like it is hard to
Yeah.
like make it in bite-sized chunks, absolutely. But thank you for saying that. I do love to teach.
Nice. So let's go back to the conversation. Give us in roll-up terms, give us the roll-up in real terms, a proper case study. If I run a 25 to 50 million revenue manufacturing company and I join your platform, your company, what are the first 100 days? What are the first 100 days to drive to improve my multiple, de-risk the business, and put a public market part on the table without the typical private equity surgery?
Totally. So it depends on how we work together, of course. So we're kind of tackling the roll up a little differently from most private equity firms in that we are looking for platforms, but really partners. We're really looking for partners with the knowledge that if they're partners, if they're really more strongly invested in the final output, then we don't lose the brilliant people that built this company to, 10, 15, 20, $30 million a year, essentially. On one hand, we're looking for what we call captains, essentially. We call them, platforms, we call them captains. On the other hand, we're just looking to give you a couple million bucks and just walk away nice and clean. So the second one's a little less complicated than the first. So I'll go through that one. So
Okay.
if we're just going to purchase you straight up, put a few million in your pocket, occasionally that deal will look like, let's say you're worth, $5 million. We'll give you 4. You'll hold on to 20%. So how do we increase the value of your 20%? Essentially, is I think the question there. So in the first 90 days, we're actually not doing anything as much as possible. We're observing, we're watching. The companies that we know is doing a good job, or else we wouldn't have purchased it.
Yeah.
But we are making sure we know how everything works. We're making sure we know who the clients are, what the strategy is, what the culture is. The most common cause of failure is a lack of capital, but very closely after that is at least for integration is lack of culture fit. So really have to make sure that, and this is not necessarily like lazy culture versus like ambitious culture. Like sometimes the culture is like, we're here for revenue versus we're here for profit. And those are very different companies and they operate very differently. So we're paying attention for the first 90 days. After that, there's a pretty simple playbook. Some call it the PEM strategy. I call it the PMI strategy now with AI. But you're essentially boosting profits. You are fixing systems. You're bringing in the right people, and then you're implementing your kind of your EBITDA maximizers, essentially. So you want to make sure that you've got the right butts and seats. That's the most important thing. That
Okay.
if we are implementing marketing, that the marketer is actually talented, that they actually know what they're doing. And if marketing is actually the thing that's missing, right? You're going to do an analysis of the company before you do anything. But let's say marketing is a thing that's missing. You're going to make sure that the right butt is in the right seat. And then you're going to make sure that we understand everything that it needs to happen for that role. We're going to make sure that every single person is tied to a number And that sounds really cold. And if you've had a really shitty boss, that probably triggers you really bad. But it also helps you to keep on track. It helps you to know that your boss isn't picking on you necessarily. One of the great benefits of money instead of the barter system is that you can't just charge me more barrels of wheat because you think I'm ugly. You have to we have the number. This is what it is, and we're going to make this thing happen. So we assign the number, and then we check in a bunch. It's constant check-ins, daily check-ins, weekly check-ins. Doesn't have to be terribly long. Traction by Gina Wickman is probably the best book for this. Entrepreneur Operating Systems. A little outdated, but great basics, especially if you're just getting into the concept. Outside of that, we're going to make sure that marketing, before we bought the company, we're making sure that marketing is running right. We're going to go fix some low-hanging fruit in there. Some of the easiest low-hanging fruit comes from email marketing. 20%, if not 30 to 40% of your total sales should come from email or from your existing customers. The very biggest e-commerce brands in the world are hitting about this level, like the Hugo Bosses, the Gucci's. 20, 30, 40% of their revenue is coming from that. You can tell when a company just simply doesn't have developed marketing or email marketing. If they just tell you how much do you have. If you're like 5%, you probably have nothing, right? You probably have a couple people that know your name and are hitting you up because they need you and they're desperate for you. If you're at 5 to 10%, you probably have, maybe your welcome email. You may have a couple of holiday things going on there. Maybe like an intro series is 5 to 10%. If you're in 10 to 20%, you've developed your flows. You've developed your upsells. You've developed a lot of your cross sells. You have developed your more complex flows, your people that haven't spoken to you in a while kind of thing. Once you start to cross the 20 to 30% level, that's really where you get into more complex low-hanging fruits. We're going to jump to other things, gets into more identity marketing, kind of like I spoke about with the crossing the chasm stuff. Then we're going to go into sales, just making sure that the system is kind of, dialed in there. That gets somewhat complicated, but doesn't have to be. And then you want to make sure you're doing projections every single month. So at the beginning of the month, how much do I think I'm going to make this month? At the end of the month, how much did I actually make? That will boost your ending sale by anywhere from 5 to 10%, or at least allow you to get what are called future projections. So if I think I'm going to make 1.5 million next year and my projections are on track and I only made 1.2 this year, I might get my multiple based on 1.5 as opposed to 1.2 because it's growing real steady. And then, of course, you're going to want to put in a CFO and a full finance team. Fractional is great as well. Most people think what do I need a finance team for? They just cost me extra money. Well, really, they're supposed to pay for themselves by 4 or 5 times over, realistically. But they're not doing that.
A good finance team.
Yeah, and as you would know, being a former CPA. So that's pretty much where we would go is low-hanging sales, and then move into kind of profity things. And then make sure that the right people are doing it, of course, at the very beginning. That can shift. It depends on the company. It depends on what's really happening. But low-hanging marketing. As we get higher, we get into sales and complex finance stuff. Yeah.
Okay. But is it a compulsory strategy for such businesses to go public? What if the C-suite doesn't want it to go public? Do you guys have to push them or recommend them to take the company public at some point?
We're very clear about that when we come into the program, that we say, look, we're going public. This is what we're doing. If you don't want to go public, don't join, or just let us give you a couple $1,000,000 and you can just cash out, There's also, with our strategy, this is a fun, really advanced trick, but you can actually build syndications and then go raise a fund, and then you can buy your syndication from yourself. So you can actually liquidate yourself and still own your own company, which is a really fun thing. So there is a plan essentially halfway through the roll-up strategy to liquidate. And if you really hate the IPO strategy, but you want a bigger multiple, you can do that. Okay. No, absolutely not. Stay away from those. Run away from those. Biggest scam artists in the game. I've never been able to refine the study, but I read somewhere one time that the highest rate of suicide in entrepreneurship is through franchisees, because franchisors have no legal obligation to tell the truth. They can screw you over super, super bad, and they do. all the time, stay away from franchises. If you're going to buy something, it's a family-run company. It's someone the CEO. Worst case scenario, it's a broker in the middle, but absolutely not a franchise. No.
Okay. All right. That makes sense. So talk about capital stack like we're whiteboarding. When do you choose bonds over equity, and how does that choice change founder outcomes for you, wealth creation, and the timeline to liquidity inside your strategy?
Yeah, great question. Deal by deal basis, typically, for the most part, the general rule of thumb is that you want to use as little of your own money as possible, right? If $0 is possible, you do $0. Rarely the case.
I'll do $0, but that's not the case.
Yeah, I mean, if you can make it happen, make it happen. And in fact, I mean, major companies have been built with no capital at all, really. I mean, Blockbuster, Waste Management, AutoNation are three really famous examples from entrepreneur named Wayne Izinga. He did essentially no money down roll-ups with all these Blockbuster companies, all these little mom and pop video rentals. But when we're really deciding, there's a concept in private equity, hedge funds. It's called carried interest, and this is it's not an asset class, but it gets its own like tax structure. Basically, it's taxed differently than income. I think it's taxed the same as long-term capital gains. Don't quote me on that. Talk to your financial advisor.
Okay.
But the benefit, lower taxes. It Your whole game here is how do you get the maximum amount of carried interest for your investors. And if you believe that you're going to get, let's say, again, just kind of easy math here, 12% on your investment, but you can get a loan at 4%, that's an 8% spread, right? So then you can give that 8% to your investors. So you can do some equity and then they're going to get as much as possible, but the loan is fixed, right? So if you can get loan amounts that are favorable, you get as much as you humanly can, really per deal. Seller financing, the loan itself. There is something to be said to not like over leverage and to leverage your leverage. That gets very dangerous. There are companies that have crashed entire world economies doing that. So don't leverage your leverage, but get as much leverage on your equity as you can. So yeah, in our own fund, I don't know if I'm even allowed to say the exact amount, but we use a hefty amount of leverage.
Okay.
The
Okay, that
SBA
makes
even is like 80 to 10, or 80 to 20, 90 10, 80 20, depending on the deal. So that's probably
that's a
accurate.
good balance.
Yeah.
Yeah. I know you talked about team building before now, how you brought in some C-suite executives, some professors in top universities, and senior leaders on your team, plus some unusual advisors. What convinced them? What was that story that you pitched them? And where did they stress test your assumptions the hardest?
Yeah, great. Oh, stress test my assumptions. Great question. Stress test my assumptions. There was a lot of right. Yeah, there was a lot of piercing. So they all came in early on, right? I mean, they all came in before we had raised capital. They came on before we'd started reaching out. So you can stress plus a business plan, but ultimately it's just accounting, right? You can make the whiteboard say anything. The big thing that got these people was two things, maybe three. So one is the scale of vision. Two was our downside protection. And then three was what we're actually doing for the world. And I think that last one is really what got them in particular.
Okay.
And then,
On board.
yeah, on board. And the
Okay.
C-suite didn't join until after the professors joined. So the professors, this is again caught in the chasm there. In the innovator visionary segment, you've got innovators and visionaries. Visionaries have all of the money, but they rely on innovators to make their decisions. Innovators have no money, and you're not supposed to ask them for money. You only ask them for your stamp of approval. So these professors, I didn't ask them for money. I just said, do you think this is a good idea? Do the numbers track? Does the economy track with what I'm saying? Do you believe we can make a difference with this amount of money? Is this worth your time? If we were to even succeed here, so scale the vision, is it even worth my time? What happens if we fail? That was a little less important to the professors because they're not really going to be involved until later on. But worst case scenario, they've just given me their stamp of approval at that point. Yeah. And then with the actual C-suite, kind of the same thing, massive scale. We have the downside protection. I had also at that point I was generating leads. I was talking to a lot of companies about selling, and we were proving a lot of deal flow. And that's actually the most important thing when raising capital is that you have the deals already. Yeah, so we already had deals to purchase essentially, and so they believe that. And I actually, gosh, I'm thinking back. I had thought about this a while. I had soft raised a bunch of capital to that point, in the
Okay.
ballpark of like 50 million or something like that. If we can get these deals together,
Mm.
if we can get this team together, and that's actually a big one is the magic if. You go to people and you say, if I can do all these other things, will you be involved? I
Yes.
realize it's incredibly unlikely, but if,
But if
sure. Right. And then you get all the other things. You get 10 people to say if, and you go,
make
look,
it work.
the other people say yes if you say yes. And then they say yes, and then it dominoes.
Wow, that's a very good strategy. That makes a lot of sense. And because you're putting all these conditional statements, it shows that you're trying to put your own skin in the game and you're going to make it work. So if you're
Exactly.
going to bring that to the table, they're more than happy to commit.
Exactly. And that's actually a fun venture capital thing as well. If you have a venture
Okay.
capital idea, venture capital is really hard to raise. Well, it's hard to raise money for. You can just Google venture capitalists, right? You can just Google angel investors. They're everywhere. They have so much money to give away, but you don't have the right deal. If you just, but if you take your idea, if you say, hey, look, I've got a great new fertilizer idea or whatever, right? And you go to, a bunch of fertilizer companies and you say, here's my idea. If I can make this formula, will you buy it? They're not committing any money. They're not paying you anything. But yeah, of course, if you can make this incredible new fertilizer, of course I will pay for your fertilizer. And then you've got these corporate contracts on the hook, quote unquote. You go back to your VCs and you go, look, if we can make it, I've got the customers. They will give you money.
That makes so much sense. But let's talk about let's get tactical on on sourcing on the sales side trust of things. Which prospecting and relationship systems from your marketing life still give you an edge today in finding off-market deals and winning in the
Mm.
market?
You know, crazy. I built up a pretty solid Facebook. My Facebook
Facebook.
gets me My Facebook gets me a lot of investors, not deals to invest in, but investors. So that's been fun to realize, and I've really started capitalizing on that this year. I was originally trying to find off market deals through my friend networks, through broker
Hmm.
networks. I guess if they're through brokers, they're technically on market, but those are just garbage. They just all came out garbage, frankly. I actually, so this kid in Pakistan, he didn't know anything about private equity at the time, but I think I was his like fourth client or something doing email marketing when I asked him to start doing the professor thing for me, and he like blew me out of the water. I was like, oh my god, you got so many professors, I was like, can you do this again with the private equity stuff? And he was like, I don't think so, but let's find out. And he did, and it was incredible. And like, I haven't been able to recreate it myself. I like tried once when we were like not together. I've had other people try to implement it. He's incredible. He's just absolutely amazing. I don't know exactly what he does without giving the secret sauce away because I don't even know the secret sauce. He does essentially like data mining, I think with Clay, and then it's just cold email outreach, and then he gets the leads through like D7 Lead Finder and Apollo and stuff like that.
Okay.
Real simple stuff, but he's really good at it. So yeah. So I actually don't get any off market leads myself. He gets all of them for me, and he's amazing.
Oh wow.
Yeah.
Shout out to your business partner. He's doing
Yeah,
all the heavy
absolutely.
lifting.
Or you see growth partners, honestly. There's so many leads out there. I can't handle them all. So please come take them. If you want to steal my business plan, give me a phone call. Donate half of it to nonprofits, to saving rivers, to supporting veterans. I don't care. There's more than enough money to go around. Hit me up.
Do you have specific nonprofits you support or anyone that just aligns with your philosophy?
I mean, there's a bunch of great ones out there.
Ah,
The Working Families Party is probably the one that I've been most excited about recently. The Gates Foundation, the Rockefeller Foundation, all doing great things. They're pushing the bounds in blended finance, which I think is really great. I'm a big fan of endowments as a concept. So, I do pay attention to like, just Yale and Harvard's endowment and just
oh,
what they're doing there.
that's
Yeah. Nonprofits, just feels like a waste. It feels like you donate money to buy blankets. could have donated money to invest in land and stop the land being torn down and then use the proceeds from that land to buy blankets. Just endowments just make a lot more sense. I pay a lot less attention to nonprofits. I pay a lot more attention to endowments.
Nice. So let's talk about exit strategy for businesses. I know for founders listening right now who want a meaningful exit without stepping back into another job, what are the 3 readiness moves they should make within the next 90 days to fit into your criteria and lift valuation?
90 days is a little tough. I mean, selling a business is not a small thing.
Okay.
Yeah, and we're looking probably about a year. You probably want about a year, maybe 2 years even, really, if you're really going to do this.
Okay.
And there's a difference between the value of the company versus the actual sale price. Like, for example, I think the Fed just cut rates, or they're about to cut rates. I don't do real estate, so I don't really care. But the price of a company, as with every asset, will increase as interest rates go lower. So if you are looking to sell in 90 days and rates are really high right now, you're going to get a lower value, obviously. And if you can time it so that rates are low, people have more money to spend, you're going to get more for your money, right? So beyond a whole bunch of other stuff, that in and of itself takes years to time. And there's kind of predictable market cycles. If you're going to ignore that, then most of the companies that we come across that want to sell but are having a disconnect between how much they want to sell for and how much it's actually worth, typically the 2 biggest issues is, one, they're in charge of the sales in particular, and they're like, well, I've got all the relationships. Why would I let anybody else do sales? Well, that's why I don't want to buy your business, is because you're the person doing all the sales. If you're gone, how are we getting sales? Stupid. So get a salesperson. The best net promoter score in the industry is coaching sales, McMark. A little bit of bias there. He's a friend, but he also became a friend because he was the best. So, shout out. And so sales team's is usually the biggest issue. They've usually got a project manager at the level where we're at least reaching out to. Yeah, get a sales team. You want to be able to take a 30-day vacation. All of your partners, all the equity holders of your company should be able to take a 30-day vacation, and that company should grow while you're gone without your input. If that's not possible, you're basically an owner-operated company, and you're going to cap out at like 2.5, maybe 2.7, 2.9 times cash flow. Versus if you're a professional company, not only is it going to be less stressful on you, not only is your company going to grow faster, but I can pay you more for it because I don't have to do a bunch of rigmarole to make sure it's going to run right. So that's the 2 biggest things: management, sales, completely delegated. Beyond that, I mentioned earlier projections. You're going to want to make sure that your projections 5%, within 5%, on point. Make sure your margins are high. Give up sales if you can't get that margin. I met a guy in New Jersey. He had a great company, great sales team, great amount of employees, great history. Maybe it's just New Jersey remodeling. I don't know, but he was doing like 10% margin there, and it sucked because he was a good dude, but company wasn't worth a lot. He's like, he worked very hard. He seemed like he knew his stuff, and maybe it's just New Jersey, and maybe he needs to move to Missouri or Pennsylvania or somewhere else and apply his skills. But he's not going to get a strong sales just straight up for that company. And if the market's not letting him, that sucks. You need to go somewhere else for that point, or you need to hire a sales coach. That's a place where a lot of people they just carry a lot of ego. Hire someone who has sold their company before, or is a little bigger than you, and just hire them to give you the advice and just do their advice. The last big thing I'll say.
I feel people get a lot sentimental because this is their life's work, and they can't just let someone else just come and buzz them around and tell them what to do. Like, dude, I grew this thing myself with blood, sweat, and tears. So I'm not about to give up that control that easily.
Oh, and I know it, and I know it. But imagine your kid, right? If you didn't let them leave the house, you've got a child called it at that point, right? They're just gonna sit in their bedroom and not see the sun ever. But like, you want your family to grow, they gotta get out there. So, and it is, and it's tough, and it hurts, and I'll be honest with you, if it hurts too bad and you can't let it go, you need therapy. Straight up.
Therapy, yes. Definitely need therapy. You're talking about therapy. BetterHelp is the #1 online therapy brand, so check them out. Shout out to BetterHelp. I know you're building an AI model that is trained on your life's work. How is that tool supposed to help you with your sourcing, due diligence, and integration checklists? And what exactly are you trying to optimize in your business using this tool?
It's a constant process. It is tough. Private equity, blended finance, it's all very complicated things. In a couple of years, very complicated things are going to be free, and or was it simple things are going to be free and very complicated things are going to be very cheap? Oh, sorry, I'm spazzing out a bit, but
Yeah, we're back.
we're back. I am doing my best to get all the knowledge in my brain into a bot that I can just work with. If someone else is going to do it, I am terrified that that person doesn't care about anybody else, that they're just psychopaths. And you know what? And there are those people, frankly. I am terrified that the amount of psychopaths is not going to be matched by the amount of non-psychopaths in the industry. And
Non-psychopaths. What a way to put
psychopaths,
it.
something like that. Normies, I don't know, kind people or something. So the robot, with this blended finance thing, with these no money down roll ups, especially with blended finance, because you're able to get better deals, even from sellers at that point. I would like to see us competing against the BlackRocks and the Blackstones of the world, and supporting universal basic income. There's a lot to that question, and with the benefits of AI compared to compared to the rest of the industry, I think we could really dominate and
Yeah.
do some good with it.
I mean, it's very commendable you're even thinking in that direction. Yes, AI is here and it's here to stay and it's here to take over. The earlier you jump on the train and make the best use of it, so you get the first foot in the markets, the better for you. But talking about your company and zooming out into the next decade, what's the legacy you hope Protopian is gonna land, basically with your life's work and all the impact you're making?
Great question. 10 years.
I know it's
Let's
like
see.
so far out in the future, but just
Genetic.
what's that legacy impact you hope to leave for the next generation?
For the next generation, it's probably more what I think about maybe the next 10 years. I've got a 3 to 5 year plan, and I've got maybe an 80-year plan. 10 years is a little bit of a dark spot for me at the moment. For the next generation, my God, what does the world look like for the next generation? I mean, AI might end work for the next generation, Yeah, I mean, I don't even see this company as legacy, because I think human society is going to be so fundamentally altered by the time that I am old enough to leave a legacy. What I hope to accomplish, I suppose, in 10 years, I mean, billions and billions of dollars. I mean, to go public on NASDAQ, you need a $2 billion valuation. I'm personally going to be donating half of my stock to these climate forces. We're able to accomplish this with a team of 10-ish, 10, 12-ish people, You scale that up to a team of 100, right? And then suddenly you're doing 50 billion, in 5 years as opposed to 5. And then you couple that with blended finance, and you're able to put 20% down or 20% insurance on 80% equity, and then you're able to leverage that into another 80-20 split on $50 billion becomes trillions of dollars of impact, essentially, into purchasing land to make sure they don't burn down, purchasing businesses and making sure that they become sustainable, that they don't fire everybody as soon as they're purchasing someone, or that as soon as they're trying to squeeze out for shareholders. Using AI and realizing the immense amount of benefit that will go to shareholders from AI is only possible because of the world system that was built around it, and that the apple does not evolve for its own taste. It evolves to nourish the forest. So that's the legacy that I would build.
Because you're basically transforming lives, you're transforming businesses, you're just doing so much more for the environment, and we're just really grateful. So thank you so much for being on this show today. But before I let you go, we're going to play a mini game. It's called the Firecracker segment.
Let's do it.
So this is just me hitting you with a bunch of questions and you hitting me right back with the first answer that comes to mind. So
You
drum
got it.
roll. So if you could buy one boring business tomorrow for its cash flow alone, what is it and why?
Man, I just put in, I got an LOI signed 2 days ago. My God, I'm so excited for this deal. It's the best roofing deal I've ever found. I'm so excited for it. It is $5 million revenue, $3 million cash flow. We will see if the deal goes through, but oh my Lord, is this thing. I think so. We've got the money. It's just a due diligence thing at this point. So hallelujah, we found this. This is a gem, and this is one out of 1,000 deals that we just found. This one. There are other deals that I'm looking at. If I didn't have this one, right on the table in front of me, flooring, roofing, HVAC, anything in home services or building materials related. If they're purchasing home materials or they're installing home materials, goldmine. Right now, boring. Nobody wants to pay attention. AI, robotics. Oh my Lord, the dollar signs in my eyes for that industry. Right?
So what's one thing a seller says in the first meeting that makes you quietly pass off the deal? Like, okay, I'm not going to work with this person.
Gosh, well, it's less of a what they say and more of like if they interrupt me a bunch. You know what I mean?
Okay.
I'm here to listen. I want to know what you're saying, but if you are going to cut me off, and I'm trying to think the exact example. I mean, there was a guy recently who it's just rudeness. If you're just not going to be a polite human being, like you might have a great company, you might not have a great company. If you don't have a great company, I'm going to sit there and shoot the shit with you. And I'm going to tell you how to make your company better. I'm going to tell you how in 2 years, I'm going to come back, I'm going to buy this thing for the maximum amount of money possible. But if you're rude, if there's any part of you that makes it feel like, wow, you're going to be a pain to work with, I am gone immediately. I will push a little bit, just like, are you having a bad day? But like 2 or 3 interruptions, that's a personality trait at that point. If you're like shutting me down in the middle of conversation, or you're just like brusque, you're not showing up on time, you're questioning my motives for wanting to be here, or if I'm like a slimy person, like do your research, look me up, like this is not the place is to like question who I am as a human being in the first 10 minutes of the call. If it's like, if you're gonna be weird, I'm just gonna hang up. I just don't have time. I'm gone immediately, no explanation. So
You
that's
can't
it.
question you like this is the Samuel Wiseman.
I mean, it's not even questioning my credibility. Yes, like you can ask like, who do you work with? Who do you work with before? Like that's all fine. But like, are you a sleazeball? Are you just one of those slimy private equity people that's here to like ruin my business? I'm going to defend myself the first time. I'm going to say, no, I absolutely got in the industry to help take care of people. But if it's going to keep coming up, I don't trust you people. You're going to have to prove to me, like, why am I going to share any information with you? Like, I don't know anything about, okay, well, fuck it. I don't give a shit. I'm going to call the next person. They're going to be kind on the call and probably going to have a great deal anyways. I don't need you.
It doesn't take anything to be kind, really. It's just good etiquette, treat people nicely.
That's
Life
it, really.
is easy.
Yeah. You don't need to be smart. You don't need to have a great company. You just need to be kind.
So what's one process change that adds the most EBITDA in a business in the first 100 days? What would you say from your experience?
Email marketing, hands down. It's
email
so easy.
Marketing
easy
is gold.
It's free. Implement.
Yeah, nice. And I know you're such a busy person, but how do you unwind and reset?
I've been recently. I started writing again. Actually, I haven't been writing any music or musicals in forever. Just in the last like 2 months, I started writing a novel again, and it has been so much fun. I can't stop thinking about it. Actually, before I go to bed, when I wake up, it is lighting me up right now outside of these deals. And I have 3 dogs, and we do about 7 miles of walks every single day. So those 2 every day,
That's
almost
great.
except the summer. For the last 4 years, I've done 2 marathons a week. No comment,
What's
Stephanie.
going on?
No comment.
Samuel, it's been amazing on the pod, having you on the pod today. But before we let you go, how can we reach you? What are your socials, websites? How can we get to you?
So LinkedIn, Samuel-Wiseman, linkedin.in/Samuel-Wiseman. Protopian Capital is probably the best way to get a hold of me, of course. And then my socials, Facebook and Instagram, just Samuel Morgan Wiseman. Morgan like Morgan Freeman, Samuel like Samuel Jackson, and then Wiseman like an old wise man, Samuel Morgan Wiseman.
You're a wise man. Yeah, nice. I'll make sure I leave the links in the description to make sure our followers go right there and click you, find you, and get you to help your businesses. Well, it's been a masterclass. This has been more than a masterclass. I think we need to have a spin-off series because There's so much concept we packed in this conversation that we need to unpack in several. When you break it down for us, I'm just really grateful. They said gratitude is good attitude, and I'm grateful you've shared your life's work, you've shared your knowledge, and you shared your time with us. Thank you so much for being on the pod today.
Absolutely, absolutely. And if anyone doesn't have a business, they just want a business, they need 5 million, well, let's do a deal together. Just one last thing. If you have a good deal and you need some money, feel free to shoot me a message. Let's do a deal together.
Amazing. So there we have it, guys. Samuel has basically broken down everything, mergers and acquisition, deal, and his whole life, how he got into financing. You see how much he was able to grasp in 1 year. This is 1 year during COVID when everybody was shouting, "Oh, the end of the world." Samuel basically trained himself in finance and has built up an empire out of it. So there's nothing you set your mind to do that you can't achieve. So let's continue to turn knowledge into action and Briggs into bank. This has been Briggs and Banks with Steph, and this is me signing out.